Good afternoon, everyone. Uh, Dollar rupee has been in a small range in the last few days of between say 82 90 to 83.10. There have been a lot of inflows into the country which are getting absorbed by RBI, and therefore we are seeing this narrow range for the past few days. Okay, Fed has actually Fed had a meeting on 31st of January, and they had said that they will not be cutting interest rates in the near past, and therefore dollar had started to move up. It was at nearly 100.80 about a month ago, and now it's at 104.20. And but in commensuration with the dollar index moving up, US yields also moving up from about 3.80 to about 4.0. Dollar rupee has been relatively very stable, not able to move down or move up, because on one side RBI has been buying dollars, on the other side exporters and others are selling dollars, particularly the FPIs who are investing in debt. Now, oil has also been relatively stable, though it moved up to 83, 84 levels in the past few days, but it's again come down to 77. Oil is the biggest commodity which India buys, and therefore its prices and its and the quantum of the buy has to be closely watched for the country. And as it falls, our trade deficit and current account deficit also comes down in accordance. Therefore, oil has come down, and we are in a relatively better stage than about a week ago when it went up to $83 per barrel. Our indices have been doing really well due to inflows from maybe retail, and Nifty has nearly touched 22,000 levels, and from a low of about 15,000-16,000, it's gone up to 22,000, which is again due to inflows mainly from the country, but some amount has also come from FPIs. But FPIs have been investing more into the debt segment than into equities. Equities, they have been net sellers up till now in this year, 2024. And in debt, they have been net buyers of $2.5 billion. And they have been investing in the debt segments, looking to the fact that we are very close to the JP Morgan and to the investment in JP Morgan index fund starting from 28th of June. So it's always been front running by a few people who expect the yields to fall, and therefore a lot of inflows coming into the country in the debt segment, which is keeping dollar rupee on the lower side, more on the lower side. If not for RBI, we would have seen 82 levels possibly by now in dollar rupee. Now, the European currencies have all been falling after what Fed said on 31st. European currencies have, fallen down considerably. And but despite that, dollar rupee has not fallen. As I already said, that dollar index has risen, but dollar rupee has not. Dollar rupee has not risen to that extent as the fall in European currencies. That's because of the inflows. Plus, Asian currencies have been in a better stage, and they have been appreciating against the dollar generally, and better performance. Economy has been doing well, but particularly to European economies. So Asian currencies, we are dependent on the movement of Asian currencies also, as we need to stay competitive enough to keep rupee in a stage where exporters can not gain much. At least they need a stable rupee, so that they know that this is amount which we will keep getting from our exports. Now, the government policies, the Indian data have all been relatively very good in the last many months, 6 months, I would say. And particularly if you say today, the services data came at 61.5, which is one of the highest in the last about 3 years. And that has, and the fiscal deficit has also been on the lower side, going up considerably, and government actually taking the fiscal deficit down to 5.8% instead of 5.9%, and targeting a deficit of 4% by end of 2026 in the recent budget which they had sent. With all these positives for the country, it's more of inflows into the country. Many more people would like to invest in the country from outside, and therefore a lot of flows. And these flows will keep taking dollar rupee towards the downside, except for RBI, which will keep buying the dollars to ensure exporters are helped. In under the circumstances of the geopolitical crisis in Israel, plus in Ukraine, um, uh, keeps, has allowed exporters to I mean, their exports have come down possibly in the month of January, because we are receiving less orders, particularly from the Europeans. Therefore, at such a stage, RBI help is required by the exporters to ensure that at least they do not lose on the rupee front. Uh, so the geopolitical crisis has made RBI to ensure buying dollars on a constant basis. Now, RBI's policy has started today, and we will have the interest rate decision on 8th. RBI will mostly keep interest rates constant in the next in this policy initiative, and but will what RBI will say for in future will be the point which we have to watch in this policy. So. And RBI also gives a comment particularly on the currencies, so we need to know what they say on the dollar rupee. Mostly, it will be that dollar rupee is stable, and has been the most stable currency amongst all Asian currencies. So a stable currency would actually attract flows, because people love like stability, and therefore we will be getting more of inflows in the next few days, and particularly starting from 28th of June, when when the inclusion in JP Morgan actually starts. We could get flows of around 25 billion, and if we are included in the other two funds of Bloomberg and FTSE, we may get another $20 billion in the next 1 year, which will keep the rupee in an appreciated level. And therefore, for the exporters, it's time that they keep selling dollars or their receivables, and ensure that they are not unhedged to a big extent. For importers, it's a wait and watch. So they should keep getting slightly lower levels, which they should buy, and ensure that they are hedged at least for the near term, if not for the far term, because in the far term maybe they could be getting lower levels. Broadly, rupee should be in the range of 82.70 to 83.40, and in a narrow, say for next 15 days, between 82.90 to 83.20. So that's what I expect rupee to be in the next 15 days, and as advised, exporters to keep selling, importers to watch correct levels to buy their near-term imports only. Thank you all.